Alright, hello everyone, and welcome back to the daily update on 1000 days challenge. This is day 672, so let's get things started. Alright, so first and foremost, the balance remain the same, no change in terms of that. And if you look in terms of the equity market itself across the board, we do see a very nice green bullish candlestick across the board from US and China stock market yesterday itself. But bear in mind, today still looks rather flat. Reason being, if you look across the board, what I do actually notice for yesterday itself is even though we did form a green bullish candlestick, do bear in mind that we are still not forming a very nice good base. And in addition, I mean, for S&P 500 and Nasdaq, we are technically forming a decent base right now. But do bear in mind that what I mentioned previously is that we have a very clear horizontal resistance region itself over here. So the 4.15K region itself for S&P 500 will be a key primary resistance right now. Whereas on the other hand, for Nasdaq, you'll be around the 13,000 region itself. So just right above here, we actually come very close to it. So the key thing or good thing over for S&P 500 and Nasdaq is the fact that we are tentatively finding support at a 20 exponential moving average. So instead of previously using it as a dynamic resistance, it seems to be acting as a dynamic support right now, which is a very good first sign. And also by forming a decent base over here, if we do break above, you'll very much be more likely to be a more sustainable push through and a reversal pattern as well. So that's something that is a good sign in terms of if you're looking in terms of bullish momentum wise. And over, if you look in terms for the ASHR and KREP itself for the China stock market, the downside, they're not forming a very strong base. So even though we're above the 50 simple moving average for ASHR itself, there's still a risk that we could be clearly rejected, especially previous over here, we did see some sort of key price action over here. So right now, definitely we do want to break above the 50 simple moving average and stay above it because we already actually managed to stay above the 20 exponential moving average. So I do see that potentially we could be in for a decent reversal itself. But bearing in mind, if you just look purely on this pattern itself, it's actually a very bearish sign in the sense that this is generally a rising bearish wedge in itself. So we get a 1, 2, 3, 4, and this is the fifth wave. So if we do break below this 20 exponential and 50 simple moving average in the coming week itself, it would definitely be a very bearish sign. We could in fact be seeing a lower low in that perspective, or at least a potential double bottom in that sense. So this is not something we want to see, especially if it falls into a bearish rising wedge in that sense. All right, so similarly, you see KREP, but KREP doesn't have such a nice kind of a rising bearish wedge in that sense. But we do, however, actually form consolidate over here for 2 days, and then we broke on the third day itself. So right now, if we could maintain above this horizontal support region itself, and the main important thing is that for these 4 days, if you do close around here itself, we'll also be maintaining above this 50 simple moving average, which previously, like I mentioned, we rejected once, twice, 3 times, 4 times, and the frequency of the tests have increased dramatically over the period of time itself, which gives rise to the sense that we're much more likely to break above it on this very fourth try itself. So now the key thing over here, if we did form a low and a higher low, high and higher high. So the question is, will it be sustainable? We have to look in terms of ASHR itself to ensure that they are both breaking in the same time and the momentum is carried through across the market. That will lead to a more kind of a broad market, kind of a bullish momentum perspective in that sense. All right, and then finally for Bitcoin itself. So for Bitcoin itself, we're still tending to look a little bit more bearish. Like I mentioned yesterday, so we did form a bit bearish engulfing candlestick. Volume was also quite decent. And we do see a decent bounce yesterday itself in terms of the green candlestick, but bear in mind, it looks more like a dead cat bounce simply because it bounced right up into 20 exponential moving average and by some weak rejection. Today we are followed through with a clear red bearish candlestick kind of retraction. So although on the other hand, on the 4-hour chart, I'm not looking for any short setup, even though it may fulfill some of the criteria. Reason being is very simple. We are still quite far away in terms of we have dropped quite dramatically over the past 8 to 9 weeks in terms of Bitcoin itself and the weekly chart itself. So I do see potential that even if we do drop itself, it will be very much restricted between these zones, which is between the 25K to 30K region itself for the foreseeable 1 to 2 weeks ahead. So until that is clearly breached, and then we got a potential capitulation pattern going right into the below the 24K or 25K region itself, then that could in fact be the clear capitulation that we could need in order for cleanse out before we actually have a continuation pattern towards the upside of things. So let's see how things goes. Definitely this looks to be an ABC kind of a corrective wave pattern, in which case it'll be very interesting to see how price trade near the 23K region itself. All right, otherwise, that's more or less about it. If you guys have any questions, feel free to drop by your comments below. I'll see you guys tomorrow. Take care. Bye-bye. Yep, so anyway, just to conclude, I won't be entering any trade for Bitcoin right now based on price action on 4-hour and higher time frame. But if you're looking on shorter time frame wise, then it may potentially make sense. Reason why I do not enter on the 4-hour time frame is simply because of the risk to reward isn't there. So I do see that even if we do were to drop itself, I have to put an extremely tight stop loss. But within that type stop loss itself, it will still be in a valid range bound region itself. So either way, it doesn't make sense. Either have a too wide stop loss resulting in a very poor risk to reward setup, or I have a very tight stop loss but it hits and does not fulfill the criteria that we could still range bound over the period and my stop loss could be triggered for no apparent reason, even though the sentiment has not changed, and that ultimately the downside could still be in play in that sense. So what I do want to look for is that we consolidate very nicely below the resistance or below just above the support, and then thereafter we do break, I'll be able to put a much tighter stop loss in that sense. All right, so otherwise that's more or less about it, and I'll see you guys tomorrow. Take care. Bye bye.